All right, what's up, Tycoon? Super excited for today's video. We're going to be taking a look at ticker symbol USO. This is United States Oil Fund. All right. And before we do that, just want to mention I do viewer requests every single week. So if you have any stocks or tickers you want me to analyze, even a crypto, let me know in the comments below, and I'll be happy to make a video for it as soon as I can. Okay. So we're looking at USO on the daily chart. And I have a nice chart pattern drawn up here. Okay. We have what's known as an ascending triangle. Okay. And this is a bullish pattern. All right. We'll go to Investopedia real quick so you guys can look. And this is the pattern. Okay. Ascending triangle. All right. So that's what I've got drawn up here. We have our line here and we have our line here. Okay. Um, now it's often a bullish chart. Okay. Um, and is not only easy to recognize, but is also a slam dunk as an entry or an exit signal. Okay. This is what Investopedia is saying. All right. So that's what we're doing. We have the pattern now, and we're just going to look to see how the pattern plays out. Right. It should be noted as a recognized trend, it should be in place for the triangle to be considered a continuation pattern, meaning it's going to continue the trend that it's already established. So let's look at what the trend is before we hop into this, right? We can do that a couple ways by looking at our 50 SMA and our 100 SMA, and we can see that they're in an uptrend. So we're obviously in an uptrend, or we can go back in time previously and look at before the stock chart, before this pattern happened. So right here, and we can see here, it's still in an uptrend. Okay. So now we know that this is a continuation pattern and that we are in an uptrend. So if we were to continue the trend, it would be upwards, right? Okay. And it just goes into it a little bit more here. The chartist will look for an increase in the trading volume as the key indication that new highs will form. An ascending triangle pattern will take about 4 weeks or so to form and will not likely last more than 90 days. Well, look at what we have here. Okay. This is February 18th. February is a short month, ends in 28 days. Oops, sorry. Had the hiccups. So so March 18th is going to be 38 days. Okay. Um, April 18th is 48 days. May 18th is 58 days. So we're right around 50, close to 60 days, I believe, in this pattern. And as it said, it takes about up to 90 days. So we have 90 days to possibly bounce down here, come back up here, and bounce in between this pattern, and look for the breakout. Okay, so over the next month, I want you guys to pay close attention to USO, right? And what we're going to look for is we're going to look for a clean break above this line here. All right, now what what we would look for confirmation is for the candlesticks to start to open and close above this line, right? If we get one that opens down here and closes above it, and then the next one is closing below it, and they start to close below it again, and then that's not confirmation of a breakout, right? What we need is the candlesticks to open fully above and close fully above here for a sign of confirmation. All right. Now, one thing that we do need to pay attention to and be wary of, okay, is this gap down to fill. All right. So gaps tend to fill about 90 to 95% of the time historically in the stock market. It's just a matter of when, not so much a matter of if, right? And this chart has a bunch of gaps all over it, but they've all been filling, right? We have a gap here that filled. Okay. The gaps are going to be these blue boxes. We have a gap here that filled. Okay. We have a gap here that filled. There's gaps all over the chart. Gap here that filled, gap here that filled. So, USO has been doing a good job of filling its gaps on the daily chart. So that's why I'm showing you guys, well, hey, we do have a continuation pattern, a bullish continuation pattern. But we have to be, wary, okay, that there is a gap down to fill. Now, this may not fill anytime soon. It may fill the next time oil goes into a bear market. And, a lot of people think oil and energy are going to be doing pretty well right now, especially with inflation. Okay. So we have our bullish continuation pattern. We're trading above the 50 SMA. That's bullish. Okay. So, we may come down here, bounce around the 50 SMA or this trend line as a support level if we start to pull back. All right. And then we also have a little bit of some bearish divergence on the chart as well. Okay. If we look at the highs on this day, which would be right here. Okay. So we have a high here. All right. Just show you guys, we have a high here on this day. Okay. And then we come here to our most recent high. We have a high here. We have a higher high a high here, and a higher high. But on our RSI, we have a high and a lower high. That's what's known as bearish divergence. Okay, that's a form of bearish divergence in the stock. We also have it on the bottom side too. We have a high here, or a low. I'm sorry. So here's our low. Okay, so we have a low here. Okay, and then if we go to our next low, to our lower over here, right, we're making higher lows. So we're making a higher high and we're making a higher low, but the RSI is going lower. We have a low here and then a low here, a lower low. But if we notice this is making a descending wedge pattern. Okay, now descending wedge pattern is bullish. So what you can expect to see, right, is you would expect to see it get rejected somewhere along here, bounce here, then bounce back up, bounce here, and then you'd have a breakout up to the upside, up to where your previous highs were on the RSI. So there are some signs of that we do need to be cautious, right? We have a gap down and we have two forms of bearish divergence on the top and the bottom. But when it comes to patterns, we have a bullish continuation pattern and we have a bullish descending wedge pattern. Okay, so the breakout may not come right away. Like I said, we have this bearish divergence on the RSI. So we may start to pull back. Okay. And if we pull back, we're going to look to catch support along the 50 SMA or this trend line here. All right. And then we want to see us bounce. We want to see us break through our breakout level here, but we may face resistance and come back down before ultimately we get the move and we finally see, is it going to break above or below, right? Because this is going to tighten and tighten and tighten, and eventually it's going to cause a squeeze on the stock. And volume, if we go back to here, okay, the chartist will look for an increase in the trading volume as the key indication that new highs will form, right? So this is our volume here. We can see volume has been dying down. Okay, so the price has been going up a little bit, but volume has been dying down. We're really going to need to see volume explode and volume get higher and push us past this level here to really make those new highs, right? So if we see volume continue to sell off and volume doesn't step in and there's not enough buyers in the market, then the patterns do not always have to work, right? 100% of the time. So we could get that break, and then if we break this support trend line, we could come all the way back down to this gap down here to around $66. All right, so that's my technical analysis, my breakdown on USO, United States Oil Fund. Thank you guys for watching. If you want a little bit more of an in-depth video on gaps, I spoke briefly about gaps in this video. I have a tutorial on gaps and really what they are and how to trade them, and how to utilize them to your trading strategies. And I also have a tutorial on divergences as well, if you need help with bullish or bearish divergence, charting it up, things like that. Okay, so watch those videos. Thanks for watching. Like, comment, subscribe.